We are just a few seconds away from the June retail sales report. Every data point matters with the Fed getting ready to meet once again. We'll see if there is a rate hike coming. You can see right now, if you've been watching the futures, not a whole lot of activity. Dow futures off by about 7. This is 6 days in a row already leading up to this, though, that the Dow has closed higher. And yesterday, you had the S&P 500 and the NASDAQ closing at their highest levels, I think, since April. If you take a look right now, NASDAQ is up by about 17. Maybe it was April of, wasn't this year, April of another year. If you're looking right now at the treasuries, you're going to see the 10-year yielding 3.76%, the 2 years at just below 4.7%. Been watching to see what happens again, watching every data point along the way. Rick Santelli standing by at the CME in Chicago. And Rick, about 20 seconds before we get those numbers.
Yes, about 20 seconds, and everybody, of course, is continuing to monitor how the economy is performing from the perspective of the consumer, the bulk of the U.S. economy, at a time where the Federal Reserve keeps snugging up rates. Recent pause, of course, looks to be temporary, as the meeting coming up in July most assuredly is going to see a quarter-point increase. We're a few seconds now away from the release of the June retail sales. Becky, we're expecting a number up about 0.5%. In the rearview mirror is up 0.3. The most recent high watermark is up 2.8. That was in January of 23. And you can see it's taking a little bit of time before I can see anything passing through on the wires. Maybe the most important aspect of this number is most likely going to be how it responds to the control setting. All right, headline number looks like it's populating across the wires, up 0.2%, up 0.2% on retail sales. This is the advanced look. Definitely not as strong as we were expecting. And here's what's interesting. When you strip out autos, it's still up 0.2%. Both these numbers are a little light than expectations. And if you look at ex-autos and gas station sales, exactly as expected, up 0.3. So it improved by 0.1. Once again, these numbers are close, but still a little disappointing on headline. I don't see the control number, and when it ultimately comes out, of course, we'll be probably tickering it, or we can say it on the air, Becky. But at this point in time, that's what's out. We could see that interest rates have moved down just a little bit. These numbers really are at expectations. The equity markets are moving a bit higher, and that's most likely because rates have moved down. And that has been the big move thus far. After the rejection a couple of weeks ago that closed above 507 in a 2-year at a day where it had an intraday high of 511, that failure really across the curve and the pause, when you add that in, has certainly made a difference in the market. All right, the control number's coming out, and I'm a little bit shocked. It's up 0.6%. That is double what we were expecting. And to find a higher number, of course, you would have to go to Jan of 23, not that long ago, and that was up 1.7%. That's the high water mark. So up 0.6 is pretty good. We should continue now to see the equities try to divine whether they like it as much now that that came out, because interest rates moved back up pretty much towards unchanged, right at 3 3/4 on a 10-year.